Hey, it's Tickers. Hit that like button. Hit that subscribe button. I don't want to waste too much time, guys. So we're just gonna get right into it. We're gonna talk about Cathie Wood and the big ideas 2023, guys. So if you're new to this and you aren't really familiar with Cathie Wood, she's a big like innovation style investor. She invests in like a lot of I always say profitless tech companies, but really it's just things that she believes will be big innovative companies in the future. You can see she's got innovation right there on the screen there. I skipped around this video a lot. I wanted to get into like the big ideas part of it. She's talking about artificial intelligence, molecular diagnostics, orbital aerospace, technological convergence, and much more. And this is like her normal thing. She just talks about stuff like this, and I always find it interesting to just tune in to her ARK Invest conferences and stuff, and just see what she thinks about things. So, without any further ado, guys, we get right into it.
Somewhat rapidly. We're going, each of our analysts, and we do have the best analysts in the world certainly when it comes to original research on just truly disruptive innovation with Wright's Law as the central focus of our research. Wright's Law says for every cumulative doubling in the number of units produced, costs associated with each technology drops at a consistent percentage rate. And Simon Barnett, our Director of Research for Life Sciences, just presented a chart at Brainstorm today, which showed that the pace of acceleration in the sequencing, long read sequencing, which is the more expensive form of sequencing, the pace of expansion, the number of genomes being sequenced with long read technology is exploding much faster than even we thought it would. And it looks like that cost decline for every cumulative doubling is now 30%.
But yeah, there's she's got this whole fund dedicated to just genetic research stock, guys. Genetic fund, like ARKG is a ticker symbol for it, ARKG, and it's got things like what's else in there? Invitae, like Exact Sciences. There's a couple of therapeutic companies in there, and it's all about this gene sequencing, and just make it a lot of it's going to be used for healthcare. I feel like, and if technology comes to it, man, it might end up curing cancer one day, or solving all kind of birth defects, stuff like that, guys. And a lot of this gets into like the cutting edge of science and stuff, and especially around like where people really draw the line and stuff. And if you know what I'm talking about, you know what I'm talking about.
We're at a very low base, so there are going to be a lot of cumulative doublings. So big cost declines ahead of us, and that's what drives the unit growth. So it's a virtuous cycle, and that's another example of the Phillips curve just being wrong. When you cut prices, you get more of something. Units go up, and that should be good for employment, right? Okay, so let's go through some of the big ideas. And I just want to set it up by saying we focus a lot in this big ideas on technological convergence. So this means, S curves feeding S curves. So I just described cost declines causing an S curve. You have cost declines in sequencing causing an S curve there, and cost declines in artificial intelligence causing an explosion in demand there. And in the genomic revolution,
we're already seeing the ones for AI, just Chat GPT, especially, guys. That thing has just been all over the place. If you go Google like anything with finance right now, like it's just nothing but Chat GPT, Chat GPT, Chat GPT. How you can make $1,000 in a day? You can make $10,000 in a month using Chat GPT. $500 in a month. There's just so many people saying you can make all this money with Chat GPT because artificial intelligence is new, is exciting. Not people don't really know a lot about it, so they're excited about it. But to her point, it's cheaper now. It's cheap to have access to artificial intelligence now, and that, like she said, it brought demand. So, and she's saying that now what's coming is genomic revolution. In her words, is that Same thing's going to happen with gene sequencing. It's going to become cheaper. It's much, much cheaper.
You've got both sequencing and artificial intelligence at work. So you've got an S curve feeding an S curve, and we think explosive growth going forward. So we spend a lot of time on convergence, and Brett Winton, our chief futurist, has some fantastic illustrations here on the kinds of convergences that we expect. And he also focuses on that we've grown up in a linear world, really the last 50 years. And if we're right that we're entering into an exponential growth world, then real GDP growth should kick up here. If you look at the consensus forecast between now and 2040, you'll see it averages, this is real GDP, about 2.6%. If we are right, and these S curves started feeding S curves, and these new technologies start to be are integrated into our everyday life, they go mass market. The forecast that would be consistent with technological history and consistent with these new technologies would not be 2.6% GDP growth per year, but more like 8.5% GDP growth per year.
Oh, man. I mean, there's, like you said, I'm pretty sure she's got the data and the history to back that up. But man, I believe it, man, because we always, especially in America, we always try to do new innovation, new technology to just make things happen, really. We've always just been the leader in innovating in new technologies and stuff. And I think the U.S. is at a turning point where we need to really get back on our leading point of innovation, or China's gonna get out in front of us. So it's gonna be us or China that does it, no doubt. Whoever wins is gonna be the big winner at the end of the day. She's right about
that. With growth between now and 2030 being roughly 6.1%, accelerating thanks to super exponential growth to 10.7%. Between 2030 and 2040. So look for the convergence piece and learn more about how economic statistics are going to change. They're all going to be lagging this. That we know. It's already happening. But it's going to happen more and more going forward, meaning we will have to be much more skeptical about the economic statistics, the readouts that we're seeing, than we have been historically. We go into AI and training costs that are dropping at a 70% annualized rate when you analyze both the hardware and the software involved in AI. Think about that. If you cut the cost of something 70% per year, you're going to get a lot more of it. And just to give you a sense of this, GPT-3 performance, it cost in 2020, just really 2 to 3 years ago, it cost $4.6 million to train a model with GPT level performance. Today, it costs $450,000, and by 2030, we think it'll cost $30. So we're going to see.
Yeah. 2030 will cost $30. She's right though, guys. Like this is how technology goes. Like I said, it's Wright's law. These things become so much cheaper ahead of time. And a lot of people like to just pick on Cathie, man, but she just makes a lot of sense to me. I don't know. Like her thesis just makes sense to me. I don't know. Maybe I'm the only one. I know her fund has just exploded this year. It's down. As one of my biggest positions is down, but I don't know, man. I think she's onto something. I really do. And well, I'll hit you with a subscribe, Cathie. I will subscribe to you right here on the channel. Everybody can watch me subscribe to you. Go check out, ARK Invest channel. It's good wealth of information. And if you disagree with her, it's just nice to always hear her points of view on things. I feel like
artificial intelligence impact every industry, every company. And companies not harnessing it are really going to lose out. And the biggest impact, as I mentioned before, is going to be on productivity. And we do believe that there's a $14 trillion market out there by 2030 for companies to harness and for productivity, to enjoy the productivity lift that we expect. And
The only I actually agree with her on this. The only part I do disagree with her on is if you go look at the holdings in her fund, she doesn't have any of the big tech companies. I think the biggest company she owns is Nvidia. I don't know if she still owns it, but yeah, she has holdings in Nvidia, which is about a 500 billion dollar market cap, somewhere in that range, three to 500 billion. And she just really doesn't see that big tech companies can actually benefit from this AI genomic revolution boom that she's talking about. And that's the one part where I disagree, is that I think the big tech companies, yeah, they're big, they may be a little bit clunky at times, but they still innovate. They're still the big engines for innovation that we've had the past couple years, almost decades even. So, well, some of them not really fit the bill in the end of the day, sure, maybe, but as it stands right now, there's still companies that are quick to innovate and quick to adapt to new technology. I mean, Microsoft especially is already looking to buy Chat GPT to hold things she was talking about. So Google's in the running too. I think putting a bid up for it. So don't sleep on the big tech companies, but that's why I hold a little bit of ARK, and I actually hold some of the big tech stocks too. So just to hedge against that reality.
That forecast, that 14 trillion, is associated with a fourfold plus increase in productivity. So again, digital consumers, where we talk about the shift from linear TV to connected TV, and it is going to be dramatic during the next few years. We talk about sports betting. We talk about NFTs and digital assets and property rights and how important they will be in the digital world and how much GDP they will create. We talk about digital wallets and how they really are going to usurp much of the role of bank branches. And I think the most provocative chart in the digital wallet section is helping people understand the number of steps between a buyer and a seller these days. It's 9 in the open loop credit and debit card transaction. And the fees associated with those 9 steps are 2.6%. If we move to a closed loop balance funded transaction, where really it's the buyer and the seller are working through these digital wallets, those 9 steps will collapse to 3, and the savings will be 2.4%, which could be spread among buyers, sellers, and the digital wallets themselves. So really interesting work there. Public.
That's good to know. That's something very interesting. The one pushback I give on that is thinking about, especially Ethereum right now. There's a lot of gas fees on the network for, say, Ethereum. And that's like the biggest, application for decentralized finance and overall NFT trading and just all that stuff, really. So as far as being cheaper, Ethereum doesn't really fit the bill right now. There are other competitors that are cheaper, like Solana and Cardano, but all in all, I get her point though. The technology of there will improve, and Ethereum is constantly evolving, so it will get better over time. Just a small nitpick right there.
Blockchains, we go through and show why we're even more confident now that crypto assets are going to rival and redefine traditional asset classes. Crypto assets being valued at the end of 22 at roughly 1 trillion. We could see 25 trillion, a 25-fold increase by 2030. I know that our Bitcoin price got a lot of press this week, our price forecast. And yes, we are recommitting to the $1 million. Of course, we've had to take assumptions for.
It was a few months back now. She gave, I actually think it might be close to a year ago now. She gave a price target of $1 million for Bitcoin by 2030. So one Bitcoin would be worth $1 million in her opinion by 2030. And I'll be honest with you guys, I agree. I don't know if it'll get. I don't know if it'll get exactly there. It might go a little higher, might go a little lower. I can easily see at least 500,000 by then for sure. Like I'm almost certain of that. It depends. It really depends on the adoption and the regulation, especially. A lot of these companies are kind of cracking down on crypto, so there's a lot of ifs, ands, and buts around crypto right now.
Corporate treasury uses of Bitcoin on balance sheets and nation state treasury uses, those have come down a bit. But still, we do expect our base case for Bitcoin for 2030 is almost $700,000, and our bull case is roughly double that for 2030. So you can see the building blocks in big ideas. You can take a look at our analysis of smart contracts and Ethereum and how the merge is now causing actual deflation in the number in the rate of increase in the number of ether out there. In other words, right now Bitcoin is inflating at roughly, I think, 1.7%. So the supply 1.7% per year as it moves towards its mathematically metered 21 million units. And Ether, I think, has just moved into a decline in Ether.
Yeah, it actually, I think it was back in like October. It was like right after the emerge. Like give it like a few weeks, like call it a month after it emerged. It actually went deflationary. The amount of ETH that's in circulation right now is steadily decreasing over time. And not even just the rate of increase is slowing, like it's actually decreasing, guys. So it's an asset that is becoming more valuable over time because it's becoming, more and more scarce to get it. So something to keep in mind with Ethereum, at least. Bitcoin, yeah, slow, steady, constant inflation curve on that. That is very predictable. Bitcoin will almost certainly increase in value as long as the demand stays the same or goes up. So yeah, again, I can help but agree.
That's quite a robust statement right there. And we do see smart contracts, fees generated by smart contracts moving from 11 billion, so nascent last year, with DeFi a part of it, NFTs as well. 11 billion last year to 450 billion by 2030. And then we get into the genomics, and we now call it multiomics part of the presentation. We go through precision therapies and the central dogma of biology, DNA translating into RNA and then into proteins. So that's the central dogma of biology. And we go through innovative therapies that are reversing disease or curing disease. Gene editing, we've talked a lot about that. We have a lot in this piece about gene editing and RNA-based therapies, which should.
And I'll say this to Cathie's credit: she really is the only one I know who actually is really neck deep in like the whole gene editing, gene sequencing, type of technology. So if you really want to, get to the cutting edge of healthcare, she has a fund that's dedicated to just that. Like if you really don't think the classic healthcare stocks move fast enough, like they're actually lagging behind. Like I would agree. I don't think classic conventional healthcare really pushes the envelope. They're comfortable just dealing with insurance companies, stuff like that. But these smaller, more cutting edge companies, yeah, there's a space for them, and I think she sees that too.
Lower cost and improved time to market and targeted protein degraders that could treat many diseases that we cannot treat right now. They're just it's not possible to treat them. We go into molecular cancer diagnostics, which we believe will help us find cancer in stage 1, even pancreatic cancer, and go through early detection tests, which we call cancer moonshots, and how important they will be to treating cancer. And then we get into electric vehicles. You know our thoughts there. I just mentioned, and I'll correct myself, electric vehicle sales, I think we're up 62%, although they may have revised that by the final version of this. and we go into the Wright's law and how it's impacting batteries and drivetrains. And, we show that EVs have hit price parity with gas-powered vehicles, and now they're about to go into another accelerated decline in price as gas-powered vehicles just will not be able to compete.
You got Tesla right now, just Tesla's in control of this, guys. I've made several videos on this. She hits it on the head, guys. Tesla's raging a price war, and like other companies are just not gonna be able to compete because they're not adapting fast enough, and the costs are getting cheaper and cheaper and cheaper for Tesla, and they're just so far out ahead. Like it's just too late to catch up now. It really is.
So we do think that gas-powered vehicles are at serious risk here. And we get into autonomous ride-hail, and we believe that Tesla's in the pole position there, certainly in the United States. But we also highlight once again how global oil demand is at risk because of electric and autonomous. And we would not be surprised by the year 2035 to see oil demand down 30% from where it is today. And even by 2030, by 5% or 5 million barrels per day lower than it is today. So, and we also believe that auto sales may have peaked in 2017, that ride-hail, both human-driven and that soon autonomous, are going to continue driving down the demand for autos because the capacity utilization associated with ride-hail vehicles is so much higher than personally driven vehicles. And then we go into autonomous logistics and how drones
This is something like a good point too. Like think of just how much the younger generation's always on their phones. If they really perfect this self-driving thing, kids are just when they grow up, they're gonna really just want those self-driving cars. So that's more time they can spend on their phones and shit. You know what I'm saying? Like that's just more times they can do. More time you can spend on your phone, doing what you want to do instead of having to worry about driving a car here, having to stop at this stoplight, make sure nobody's around you, having to worry about stopping for gas, stuff like that. You can just really just relax, let the car drive itself. So this is just going to be huge, guys. This point alone, I feel like it's going to be massive. This is going to be a huge disruptor in the whole auto transportation market.
Are going to collapse the cost of the delivery cost, the delivery cost of local small items down by 22-fold, from $5.40 to 25 cents. And that's per delivery. Now, this will be at scale. That's not how low the price will be to start. In fact, the umbrella price is that $5 price from traditional delivery. But over time, competition will drive that price down to 25 cents. And we go through the world. Tasha Keeney did a very comprehensive job this year of showing how much delivery costs are going to collapse. And finally, we go into robotics and 3D printing. And I think the big surprise here is that robotics is the technology now that the multiomics revolution is well underway. Robotics, believe it or not, is the most nascent technology out there. And we do believe that from such a low base, I think we're estimating unit sales of industrial robots in 2022 were somewhere between the 600 and 700,000 unit range. We think those are going to scale into millions upon millions because the performance has increased 33-fold over the last 7 years, just 7 years. So much so that Amazon is adding 1,000 robots a day. And by the year 2030, we wouldn't be surprised to see Amazon adding more robots than people, even though the number of employees.
I could honestly see it happening even before then. They're already kind of moving towards automation as it is. So yeah, I could see it happening in the next couple of years. Never mind by the end of the decade.
Will continue to increase. Robots will increase more. Just to give you a sense of how low the penetration is in manufacturing right now. comparing it to Amazon, which is one of the most advanced companies in the use of robotics. Amazon's robot density per 10,000 employees is 3,200. 32. So it has about a third as many robots as it has employees.
It's about a third, yeah.
In the manufacturing sector, that number is 140. So 1.4%. So 33% for Amazon, 1.4% for manufacturing. And that's because the costs have been too high and they haven't been capable enough. But AI is changing.
That's interesting. I didn't even know that. I definitely have to keep my eye on Amazon. They're going to be all over that, cutting costs on robots. Amazon loves to cut costs everywhere they can. So, okay, but I don't expect Cathie to ever own any Amazon, but I sure would be surprised. Hey, let's see. I know I own full disclosure, I own a little bit of Amazon stock myself. So, interesting to just her to bring that up. That's not a stock that's in her holding. So, good point, Cathie.
And then we go through 3D printing and how in healthcare, 3D printing is reducing operating times on average by 30% and increasing performance as measured by surgical accuracy and results, really important, by 40 to 50%. Phenomenal increases. Oh, and one more thing, orbital aerospace. This again, Sam Corris has done amazing work here on reusable rockets and how quickly we're able to refurbish them now, and our expectations for Starlink, and also delineates how satellite broadband, think Starlink, could generate $84 billion in annual revenue over the next 10 years. And that's because a lot of people don't have access to broadband. I think it's 2 to 3 billion people around the world. RV.
Even the ones that do have really bad infrastructure, especially here in America, man, my internet goes out all the time. At least for me, it does. But yeah, guys, AI is going to change everything. Especially, it's actually going to even change the way the internet works. I believe it's going to change the way everything's manufactured. It's going to change the way employment works, guys. There's going to be a lot of people displaced out of work. This is something that even Stephen Hawking predicted years ago. He saw this was coming, and he wasn't even an investor, but with a bias towards it. You know what I'm saying? Anyways, guys, video's almost over, so I'm actually just going to go ahead and end it right here. And if you like the video, guys, please hit that like button, hit that subscribe button for me. And this video ran a little longer than I expected it to, but hey, nothing wrong with the watch time, right? Hit that like button, hit that subscribe button, guys. I really appreciate all of you for subscribing and watching. And I'll see you guys in the next one, because I'm out.